938 Live gets you talking.
Know your risk appetite. That's what every investment analyst tells you. But they also say the more risk you take, the more you stand to make. And the less risk you take, the less you stand to make. So how do you walk the tightrope? Let's find out from Dennis Ng, founder of MasterYourFinance.com.
Yeah, okay. So actually, in terms of risk management, one of the most important ways is by asset allocation. So for instance, currently I only have about 35% of my money invested into stocks. So other than stocks, I also allocate my money into other different forms of investments, including property, gold, silver, land investments, French wine, and UK endowment. So basically, one simple way to reduce your risk and manage your risk is actually by asset allocation.
French wine, that's a very interesting allocation for your money. Dennis, tell us about the appreciation in French wine. How much have you stood to gain by investing in wine?
Typically for French wine, we are talking about the top grade French wine, the investment grade wines. Those wines, they are rated 90 and above. And actually preferably even rated 96 points and above by Robert Parker and so forth. So most of the time you need to hold for at least 3 to 5 years. The average return we are talking about typically maybe 5 to 10% a year.
So Dennis, you basically do not drink the wine that you buy.
Yeah, that's right. I don't drink the wine. In fact, all these wine that I invest in are actually kept still within France itself. Because in actual fact, where the wine is from, the provenance of the wine, where the wine is kept, all these will also affect the value of the wine. Yeah, that's right.
Okay, so let's get back to the topic at hand, managing your risk. Is it true to say the best way to manage your risk is to know how much you are willing to lose?
Definitely. In actual fact, if you were to ask me what differentiates a real investor from an average investor is this. For the real investor, the first question they ask themselves is, what is the downside risk of this investment? And they will be asking themselves, in the worst case scenario, how much would I lose? So in actual fact, most of the real investors, first they think about what can go wrong with the investments. On the other hand, for the average investors, they actually hope nothing goes wrong. In actual fact, most of the average investors are not mentally or financially prepared if anything goes wrong. So the only question they ask is, what is the potential upside? So in actual fact, I would say that for a real investor, actually losing money is something at the topmost of their mind. And in actual fact, by making sure that they cap their losses to a maximum limit they can bear, and that's how they manage our risk, including myself. That's how I do it as well.
But let's bring it back to the Singapore investor. The Singapore investor thinks nothing is ever going to go wrong. Despite everything, I will depend on rumors, innuendo, the market talk, and I always know that I'm going to make money. And like the gravy train just never stops.
Yeah, in fact, that's why the average investor typically, in the end, they ended up buy high, sell low. Why? Because most of the times, by the time they are comfortable with investing, it's probably too late. So, for instance, last year itself, many people, missed the chance to invest in stocks. Many people also missed the chance to invest in properties. So, in actual fact, now that, let's say you look at the Singapore stock market, it has gone up by more than 50% and close to even 100%. Because the lowest point was 1,456, and now we are looking at 2,009, 3,000. It has gone up 100%. And the ironical thing is that only after the market has gone up by 100%, then people start to feel comfortable. So in actual fact, I disagree with just now one statement you mentioned by most analysts, that you need to take great risk. The greater the risk, the greater the potential for gain. In actual fact, from a real investor point of view, in actual fact, most of the time is the lower my risk, the higher potential gain I actually can make.
That was Dennis Ng, the founder of MasterYourFinance.com, joining us this morning on MoneyWise. Join us next week when we'll talk about the possibility of taking lower risks and maximizing your potential gain.
938 Live. 938 Live gets you talking.